Get cash out of your investment property quickly with a DSCR loan. Hey everyone, thanks for joining me. Jeff Trevarthen here, Jeff the Mortgage Pro. Today we're looking at a really popular topic, one that is very prevalent in today's market, especially with the way that interest rates have gone up and the documentation requirements on a traditional loan to get those things going. So today we're looking at a debt service coverage ratio loan, also known as a DSCR loan. And this is something that's specific to investment properties. And in particular, today's episode is about taking cash out of your property with a DSCR loan. So maybe you don't have a job right now, but you have an investment property. Maybe you have poor credit, but you still have a cash flowing property. All of those instances are places where we can use a DSCR loan to take money out of your property because we don't have any verifications in terms of employment or income for a DSCR loan. So let's go through some of the things that will help you in terms of getting the cash out of this property really quickly. So let's go through some of them. You can have loan amounts up to $2 million, which I think is pretty big. Sometimes we may go higher, sometimes we go a little bit lower. It's all credit dependent and how the whole credit profile sets up, but $2 million is a good number to look at in terms of how much money you can get out. These are for properties of 1 to 4 units. Now there's some investors that will do 5 to 8 units. I am not one of those people, but I specialize in the 1 to 4 unit category for the DSCR loans. Here's the kicker, which I love and why I think people really like this product. There is no income or employment verification needed. So when we fill out an application, you don't need to do anything in terms of where you currently work or your job, because we're strictly looking at the cash flow of the property and whether it makes sense or not to do a loan on that particular property. There is no limit to the number of properties you own. And another benefit is that some investors like to see that you have an entity set up to fund your property in, like an LLC or an S Corp. Others don't really care, or it doesn't matter to them. All they care about is that you are having a cash flowing property. That's hard to emphasize enough, because that's really what we're really looking for here. Okay. Interest only is available. Most of these are 30-year terms, but you'll see some 5/1 ARMs, 7/1 ARMs available as well. Usually the 30-year seems to be pricing out the best, but there is an interest only option in some instances. You have as little as 3 months worth of reserves. And remember, a reserve is just a calculation that we do as lenders. It's just for risk. And it's not stuff that you actually have to spend. It's just a calculation. So do you have 401ks? Do you have retirement? Do you have cash in the bank left over after you're done? You need 3 months worth of principal, interest, taxes, and insurance to be able to make sure that the property cash flows. Okay. Up to 80% LTV. Okay, that means that when you're taking cash out, you can take out up to 80% of the value of the property, which I think is pretty cool. That means you have to have at least 20% remaining, and you can roll in any closing costs just like any other cash out or rate and term refinance. You can still roll the fees in there if you needed to help pay for some of those costs. It's down to a 640 credit score. So if your credit is not in the best of shape, but you still have an investment property and it's a cash flowing investment property, you can get a loan. Non-warrantable condos are allowed in some instances. And what we're looking for in those instances is if it has pretty good equity and it's going to cash flow, then non-warrantable condos are considered. Now, this is a big one because Fannie Mae and Freddie Mac, the aggregators that do, forward mortgages, they do not like to have non-warrantable condos. A non-warrantable condo just means it's really hard to finance because it has litigation pending on it. So with a DSCR loan, and if it's an investment property, there is a possibility that you can get financed with the DSCR loan, but it still has to make sense again and again, emphasizing that the property still has to cash flow. And then the last thing is that short-term rentals are allowed. So if you have an Airbnb or vacation rental somehow, however it's run, as long as it has a history of being a vacation rental and we can verify that we have an average income over 12 months, then we can use that income to help you offset the debt on this particular loan. So let's go through a quick case study or an example here. I had a client just recently that had a $450,000 condo in Florida, and it had zero mortgage on it. So they paid cash for it about 4 years ago. It's appreciated about $150,000 since they purchased it. And their credit score was pretty good, 739. They needed about $200,000 in cash out, minus any closing costs that we're going to use to get this loan. Okay, so they needed to get this money so they could invest in their next property that they wanted, and it was all tied up in equity. So we used a DSCR loan for this. So a $200,000 loan at 8.5% had a principal and interest payment of $1,538 per month. And then with the total payment somewhere around $2,500 because it was a condo and you have to include taxes and insurance as well. So right around $2,500. And since it was a vacation rental, they had a history of this thing renting out for 24 to 48 months. And it actually brings in about $3,500 a month in income. So if you take the debt service coverage ratio on this one, this is 1.4, which is excellent. What we're looking for is a ratio over 1% typically, but 1.4 is even better. So you're going to get optimal terms in your financing. And this is a great loan and a great scenario that just happened. If you have something similar and you have a property that needs to take cash out and it's an investment property, definitely consider the DSCR loan. It is a little bit more expensive, but the hassle is so hassle-free. There's not a lot of extra work to be able to do this type of loan. As long as the property cash flows, you're going to be able to get a loan for the most part. Okay. If you have any questions at all, please feel free to reach out to me. I'm going to put a link down below for my Linktree account. Go ahead and click on that and grab my Calendly link, and you can set an appointment with me. I'd love to chat with you and help you out with your next DSCR loan. Have a great one.